Good afternoon, everyone. Today is Friday, the 31st of August, 2012, and this is Brian Shannon speaking from alphatrends.net. Markets finished with a little bit of a gain here today. For the week, we can see that the S&P 500 was down a little bit, NASDAQ down a little, the Russell 2000 starting to outperform a little bit with about a 0.5% gain, and basically just kind of mixed markets. Gold had a good week, as did the commercial real estate. But for the month, it was a positive month for everything but bonds and the U.S. dollar. So the market continues to show good performance for this year. And taking a look at the S&P 500, what was important to see that that held this week was this level of support down here right about 140. If we take a look at the 30-minute time frame, what I've been calling support is this level in here, about 140 to 140 and a quarter. This was a prior band of support that found that the buyers right in between the low end at 140 up here to about 140 and a quarter. So if we take a look at the 10-day chart, we can see that we're still within this range that basically we were in last week. That is, we tested the lows of last week, and then the highs of last week came pretty close to. 142.10 remains the important level that this market is going to need to break up beyond in order to continue this upward momentum here on the daily time frame. And I think it's good that we're seeing this correction occurring through time rather than a deeper price pullback. So I think the market continues to behave well. Obviously, yesterday things were a little bit sketchy after that open, but for the 2-day volume weighted average price, if we take a look at what was the average price of yesterday and today, since that gap lower, we remained above that for almost the entire session and certainly closed above it. But this was a very volatile session here today, as again, we gapped higher, sold off almost immediately, and then just another big rally, a harsh sell-off, and then another push through VWAP, and just a lot of volatility today. But for the week, I think it's pretty constructive that we remain neutral in here. The 5-day moving average is declining slightly. What we really need to get bullish on this market is for a move up beyond 140 to 140. 142 to 142.10. Back up through that level, I would expect that we would continue to show a pattern of higher lows, and that this market could continue to move up towards 144, 145. Maybe that's these highs from mid 2008 near about 145, where we could be heading next. This analysis, by the way, today's video is brought to you by Realtick. They're the ones whose charts I'm looking at. They're the trading platform as well. There's a lot you can do with Realtick, and anyways, I would encourage you to check them out. One of the stronger stocks, I think I mentioned it this week, or a stock that looks ready to move higher, especially when you look at this weekly time frame, is AIG, American International Group. On the weekly time frame, we see a nice cup and handle here that I've already drawn in with a rising 10, 20, 30, and 40-week moving average. So when we drill down, here's that 50, 100, 150, and 200-day moving average. Taking a closer look at the daily time frame, we've obviously got some support that's formed at about 33 and a quarter, that if we were to break down below that, that would be a troubling thing. And even Thursday's low was slightly above that high. But what we're looking for in here really is a push beyond about 35.05. Getting up through 35.05, AIG looks like it should be able to make another run higher. So I think this is one you want to keep an eye on for next week. And you can see I've already drawn some notes in there previously. But getting back above about that 35 level, I think that AIG could make a move of up to at least, let's say, 37.5, 38 bucks a share. And at this point, I would say, let's say we get that on Monday, your stop could go maybe to about 34 and a dime or so. This week, the volume weighted average price in there, you can see we held that right at the end of the day. So maybe a stop just below 30 at about $34.15. The NASDAQ, well, actually, let's take a look at another S&P 500 component, which is General Motors. General Motors, as we know, has recently seen all-time lows since since they got spun out by the government again, or brought public again. Anyways, it recently broke some resistance on heavy volume, and we've seen a lighter volume pullback that found support at the rising 20-day moving average. And it looks like this stock's headed at least up towards 22.5. You look at that 30-minute time frame, we're getting back above the 5-day moving average, and I think you take out Friday's high on Monday, you could get involved in this with a stop just above $21 a share. The NASDAQ, let's take a closer look here, did hold on a closing basis, although it looked a little bit sketchy there for a bit, above that 67.5 level and that 20-day moving average. So this is an area that we've been focused on in at Alpha Trends, and the market continues to be in a bullish uptrend. We're making higher highs and higher lows. Look at the rally we had earlier in this year. It looked very similar to it. So don't look at it and say, well, it might be up too much. It's been up nicely recently, but it's been backing and filling, and more importantly, just recently, it is holding support. So 67.5. We break below 67.5, then I think we've got bigger issues here with this market. On the 10-minute time frame, you can see we're kind of back towards the middle end of that range. It would have been nicer to see it close maybe at about 68.30, but I think that's just splitting hairs. The bigger level of resistance we want to see taken out next week is at about $68.70. Back up through that level, then I think we begin to make a put. Well, I'm sorry, this is that level, 68.70. Up through that level, then we push on and continue towards decade plus highs. The biggest component there, obviously, is Apple. This week we saw Apple get the patent news regarding Samsung. The stock gapped up, and that was pretty much the high for the week immediately. Apple's still obviously in a much bigger uptrend on the daily time frame. 650 should probably be a level of support to keep an eye on next week in there. And Microsoft is something I've written about and I've been talking about because it's got these higher lows with a rising 10, 20, and 50-day moving average. And we look at the weekly time frame, this prior bigger level of resistance holding as support with now what we see is a rising 200-day moving average. And it looks to me like if you can get Microsoft back above about 31 to 31.10, that the stock should be able to continue to move higher up towards, I believe, 33 plus. I'm not sure what the catalyst is. Some people, were tweeting that it might be a dividend that becomes a catalyst. It might just be a price breakout that is the catalyst for further momentum. A lot of times it doesn't have to be a fundamental catalyst, but instead just breaking past an established level of resistance. And we can see that recently those tests of this area have become more frequent with higher lows. That says the buyers are getting more aggressive, and to keep a close eye on it. Semiconductors pulled back and down into the prior range. They pulled back a little deeper than I had hoped they would. That is especially yesterday. But we would take a look at the 30-minute time frame. I was hoping that we could maybe have recovered on Thursday and then push up through what I think are the two key levels here of about $34.15 and then $34.40. Those are the levels we need to clear next week. But semiconductors, you can see here on the 10-minute time frame, we had broken some support on Thursday. We kind of had this little range, so 33.20, I guess. But we had broken down, and now it looks as though those sellers and short sellers have been trapped. And from this failed breakdown, we could see a fast move higher. That is, though, we have to get through 33.40 for that to happen. I wouldn't get too bullish on it unless we get above 33.40. Above 33.40, then we're probably going on to test $34 a share and probably even up to $35 a share because we've got all these rising moving averages that indicate the trend's higher. Now, the 10-day moving average is below the 20, and that's declining, so it does say a little bit of indecision. It may need a little bit further time to digest, but I would keep a close eye on these semiconductors. They often do lead the market. The good news was that that Intel had been really getting creamed the last 2 weeks, and it broke down yesterday to a new low and looked really pretty dire here based on the weekly chart. But you look at it, came right down to this prior resistance level, and to sell it short after it already just dropped from 27 down to 24.5 doesn't always make sense. And what you have to be aware of a lot of times is those false breakdowns, meaning from this failed move, this obvious move that takes out all the stops that were below here and gets the amateur shorts involved, the next day as it gaps higher like it did today, well, all those people who shorted yesterday are going to be scrambling to cover, and the people who had thrown their long position away would maybe be looking to reestablish. That creates a double source of demand, and the weak source of supply has basically already been absorbed into this market. Anyways, 25 looks like a key level for Intel next week. Getting back above that, perhaps it gets a little bit of a bounce. It's not really a trend alignment play, but maybe you could get a little trade out of that up towards the 20 and 50-day moving average, which currently reside just at about 25.75. I'm looking at more as a benchmark that says that the semiconductors, the SMH, which looks healthier, obviously, might cue off of Intel a little bit. The Russell 2000, as we mentioned, did show a little bit of outperformance this week here. They were up just about 0.5% for the week, and we've been looking at this inverted head and shoulders pattern here, and if we take a look at this whole inverted head and shoulders pattern, that right shoulder, that actually this inverted head and shoulders pattern actually creates a bigger inverted head and shoulders pattern on the weekly, with this whole action creating that right shoulder, and we're showing that we're testing this neckline here. Now, I wouldn't play it as a traditional measured move that we're going to get the height of the pattern about 86 down, add the height of the pattern is 60 to 86. I wouldn't say you want to add 26 points to the breakout point at 82 and be looking for 110 or 108. I think my math was off there, but anyways, the point is that we've been talking about the Russell 2000 behaving better because we have a rising 10, 20, and 50-day moving average. We've been holding this prior little level of resistance that held its support this week twice. So we have a rising 20-day moving average holding a support. We've got this area down here. I mean, if we break below $80 a share, I think there's going to be bigger problems for the Russell 2000 and the market at large. So as long as we remain above that, we want to give the benefit of the doubt to the buyers. Nearer term, it would have been nice to see this market get back above that 81.50 level that it was seemingly, it looked like things were getting going good maybe on Wednesday afternoon. Obviously, Thursday's sell-off squashed that attempted rally. But if we remain above 80 to 80 and a quarter, then I think we want to give the benefit of the doubt to the buyers. Otherwise, we have what looks like maybe a lower high similar to this, which led to these lower highs and lower lows. So that 80 and a quarter level is going to be very important for the Russell 2000. The financials are actually behaving really well. They're just kind of turning sideways in here and holding that rising 20-day moving average and the 1490 level of prior resistance, which has been support as well. So the financials look like they're heading back up towards 15.5 plus. You look at the 30-minute time frame, we get it back above 15 and a quarter next week. I think that's where this market is able to get going once again. Stop maybe down near 15.05. You might want to play one of the triple levered in there, or the FAS. But if you look at what's driving that, look at Bank of America. Bank of America, now it's tested that 200-day moving average. I'm sorry, I was thinking about Citigroup. Had tested that 200-day moving average and having a little bit of trouble with it. But if you take that 200-day moving average off, you see that this prior resistance is holding a support, and you've got a decent-looking pattern with room up towards about 32.5. Also, Bank of America is looking, you don't want to buy the breakout after this big run, but we're seeing a lighter volume pullback in here, and maybe if Bank of America can get maybe back above 8 and a dime or so next week, and then you've got American Express that's behaving well. So the point is that these financial stocks are looking decent, and I think that it's reasonable to expect that this a move above 1520 would spur bigger buying in the financials, and they'd be worth looking at on the long side as a trade. Gold continued its move. Last week I didn't think it would. We did hold above the 200-day moving average. So the opinions are easy to come by. You have to have the flexibility to say, well, what's the market telling us? The market rallied on big volume in here. The GLD did. The lighter volume on the pullback, where that prior resistance was tested intraday today, and the 10-day moving average held as support. Well, we had a nice move higher on bigger volume once again. The 10-minute time frame, we can see, once we got back above that 5-day moving average, we struggled a little bit, but a nice move here into the close. We were looking at for subscribers today, AUY and Yamana Gold above 1650 had that real nice type of move. There were a bunch of other good ones as well. In fact, the GDX is looking pretty bullish, and this is the gold mining Miners ETF. So the gold Miners ETF is looking like it's got some room to run, at least maybe go challenge that 51-ish area where we had this bigger breakdown from earlier in the year. So that 51 level was of prior support may go on to be tested here. The 30-minute time frame, we can see, let's look at the 10. It was making lower highs and lower lows prior to today, but there were some decent looking stocks. And, this one had a little bit of a struggle with its 5-day moving average, but then did finish nicely higher. Silver also continuing its move. It's, holding above that 200-day moving average and added to those gains further in here today after a tight consolidation, which occurred on lighter volume. So that's what we're looking for, is the relationship of volume, not so much, well, how many shares did it trade? As we know, for instance, the S&P 500, we've had real light volume. Well, today we got heavier. Well, yesterday and today we had heavier volume, which when we look at the 2-day volume weighted average price, that's important to see, because although we're down for the last 2 days, the average price was below where this market is right now, meaning that buyers have used that weakness as an opportunity to step up and make some purchases. Anyways, we had a lot of movement this week. The dollar continued to break down a little bit further. It's below a declining 10, 20, and 50-day moving average, the U.S. dollar index. I would expect that it would likely find some support in here, but you don't want to be a buyer while we have a declining 5-day moving average and we're below a 10, 20, and 50-day moving average. Bonds rallied pretty good, and this is looking like a failed move, fast move. It's really just amazing the volatility there in these bonds as we got back above the 50-day moving average, and that of course is going to put the bond yields lower. And I actually like looking at the bond yield chart better, because a couple of weeks ago it looked like bond yields were breaking out. They got up to that and touched that 200-day moving average intraday, but then have driven lower from that, and now we're back below the 50-day moving average as well. So for a longer term look at interest rates, we're still clearly in a major downtrend, and that 200-day moving average and prior support is where we found that resistance. Now yields may be going to settle down near 150 for the 10-year, but that's good to see. That's part of the reason why the home builders are continuing up to new highs, as they've broken out several a few weeks ago and continue to move higher. Anyways, those are some stocks and markets to look at over the 3-day weekend. I hope everyone's safe and has a good weekend. I will talk to you again on Tuesday. Thanks for tuning in.